Hey YouTube, how's it going today? In this video, I'm going to be doing my M1 Finance account review for the month of March. If this is your first time watching this M1 account update series, the objective of this portfolio is to reach an account value of over $100,000 and $500 a month in dividends by the end of 2025. The rules for this account are: I make two $100 contributions a week and an extra contribution on days when the S&P 500 closes down more than 2%. Usually that contribution is also $100, but sometimes it's more depending on the market conditions. The reasons why I make that extra contribution on big down days is because studies show that in the past that will increase your portfolio's return by double digits in the long run without adding much more money. Now I'll link an article in the description explaining why that is if you want to know more. I know these are lofty goals, especially on the dividend side, but I'd rather have high goals and miss them than low goals and hit them, right? Okay, so here is the homepage for my M1 Finance account, and last month the portfolio was worth $19,319, and the money-weighted return was 120%. This month the account is worth $20,138, and the money-weighted return has slipped to 108%, so the account value went up on contributions alone. But if we look at my performance graph of the account, we can see that it's been going pretty much sideways for the last several months, but if we look at the portfolio performance, it is outperforming the NASDAQ, but it is underperforming the Dow Jones Industrial Average, but it's almost right on par with the S&P 500, and that's probably because this portfolio is diversified. Now let's go down and take a look at my account holdings, and then we'll get into how the account performed for the month. Now, my number one holding in this account is Tesla, and it is up 810%. And by the way, this account is about 14 months old, and most of these stocks have been in the portfolio ever since the beginning. I've added just a few of them. But Tesla is up 810% as my biggest winner. My second biggest winner is Snapchat, up 472%. Then comes Square, which is up 367%. Grow Generation, which is up 213%. Uber, which is up 185%. Baidu, which is up 153% despite getting crushed in the last couple of days. When I get into the charts after the portfolio, we're definitely going to take a look at that because that is a very interesting stock to talk about right now. I think it's in a pretty good buy area, but I'll get into that later. That's followed by CRISPR, which is up 142%. The ARK K Fund, which is up 123%. Skyworks Solutions, which is up 116%. Then it's followed by Goldman Sachs, Disney, JP Morgan, Simon Property Group, which is a real estate investment trust that is doing very well over the last several months. There is Apple, there's Illumina, Carnival Cruise Line, Microsoft, 3M, Waste Management, Peak Properties, and LTC Properties, and those are also real estate investment trusts. The Vanguard High Dividend Yield ETF, Realty Income Corp, AT&T and Verizon, Dominion Energy, and then I have some treasury and bond funds just to add a little bit of diversification to balance out the portfolio a little bit. They're each only 1%, so they're not doing too much balancing out, but they do add a little bit of stability to it. And the last one is Alibaba. Now let's go up and see how the account has performed over the last 30 days. If we look at the 30 days, it has pretty much just gone sideways, but the market has chopped around quite a bit, so that is to be expected. But let's look at the top 5 winners for the month. And last month, my biggest winner was Carnival Cruise Line. This month, it is Waste Management, up 17%, followed by Dominion Energy, up 11%, 3M, which is up 11%, Health Peak Properties, which is up 10%, AT&T, that's up 8%, and then the Vanguard High Dividend Yield ETF, which was also up 8%. So we can definitely see this rotation that's going on in the market, how it looks like funds are rotating out of tech stocks and into dividend stocks. And this is why I was accumulating these stocks many months ago when they were underperforming the market. I was saying that, one day these stocks are going to be the best performing stocks, and I wanted to take advantage of them when they were cheap and accumulate as much as I could, because these dividends are going to pay off. Plus, when these stocks start to rotate up, I'm going to get some capital appreciation, because that means the other high-flying stock, like the tech stocks, are probably going to be out of favor. So this is going to help balance out my portfolio while getting me some dividends in the meantime. Now let's look at the worst performers. And the worst performer was Baidu, which was down 25%. And like I said, we'll get into that one in a minute, but that's a very interesting chart. The second biggest loser was Snapchat, then the ARK K Fund, CRISPR, Illumina, Tesla, and Square. So there was a definite rotation that was pretty obvious from the tech stocks into the safer dividend yielding stocks. And that's okay, because I know eventually these tech stocks are going to be in favor again, and with these tech stock pulling back, I'm going to be accumulating more shares of these, and that's the beauty of this M1 Finance account. It buys more when these stocks are pulling back, so you're constantly buying the pullback. So I have no problem with Tesla or Illumina or CRISPR or Baidu or Snapchat falling right now, because that just means I'm going to be buying them on sale, and eventually these stocks are going to be in favor. And you also have to ask yourself the question, do you think Tesla's is going to be higher in 5 years? I really think it is. Do you think Illumina is probably going to be higher? I think so. CRISPR, I think that's going to be higher. The ARK K Fund should be higher. Snapchat should be higher. Square should definitely be higher. So you should have no problem buying these stocks on the pullback. This is just the natural ebbs and flows of the market. But let's get into some of the charts now. Okay, let's jump over to my TC2000 charting software and take a look at some of the best performers and the worst performers. We're going to start off with the good first. This was my best performer. This is Waste Management, and as we can see, Waste Management absolutely exploded over the month. I don't know why. I guess it's just because it was Waste Management's turn to take off, but a very nice explosion, and this is busting out to a new high. So this is a very bullish chart on Waste Management. My second biggest winner was Dominion, and Dominion had been getting crushed. So let's take a look at Dominion. Now, Dominion had broken this support level, this support line that I drew on the chart, and it looks like it was going to roll over, but it immediately reversed and got right back up over that 8-period exponential moving average, that white line, and this is a false break. And if you're not aware, most changes in trends come right after a false break. So if you see a false break on a chart and then the stock immediately reverses and starts to head higher, that's usually a pretty good sign that it's going to continue higher. So if you ever are watching a support area and you see a break and then it jumps right back above it, there is a pretty good chance that it's going to continue up at least for another week or so. But Dominion Energy pays a pretty decent dividend. I think right now it's right around 4%, or perhaps it was around 4% when it was under 70. So it's got to be at least 3 to 3.5% right now. But it is a pretty decent dividend stock. The next one was, let me get that out of the way. Next one was 3M. And we can see 3M is busting out to new highs. I actually hold some of this in one of my other accounts. I was accumulating this when it was down under 150, so 3M is doing pretty well for me, and I believe they're still paying around a 4% yield. When I was accumulating them down here, I think they were closer to 5 or over 5. But this stock has performed very well for me since I was picking it up, and now it looks like it's breaking out to new 52-week highs. And since I think these dividend stocks could just be starting to get going, this should be a pretty good performer for me. I guess we'll have to wait and see. Next one was Peak. Now, Peak as a real estate investment trust had a pretty decent month, and I believe these guys return right around a 5% yield as well. And this one looks like it's busting out to a new high. It came out of this smaller rounded bottom, broke through this resistance area, came back that resistance becomes support, so it busted through it, came back and touched it. Now it looks like it could be blasting off again. So peak should perform well into the future. At least that's what it looks like by the chart. Next one was AT&T. Now, AT&T has been returning around 7% forever, it seems like. When it's the stock price is under 30%, the yield is over 7%. It might even still be over 7% right now, but this one has been going sideways ever since the pandemic lows. I'm just been accumulating this thing as it's been hanging out down here at the lows, and that's just fine. I'll be picking up more shares because that 7% yield is pretty nice. All right, let's get over to the losers now. My biggest loser was Baidu. And Baidu did have a reversal on Friday, and I actually had an order to buy 50 shares of Baidu at $173.51 on Friday, and it just missed my order. I thought for sure it was going to touch this yellow line, which is the 200 period simple moving average. Usually get a pretty good reversal once it touches that line, but I got a little bit too greedy. I probably should have had my order just above it, and it might have got filled because the low on the day was $174.05, and mine was $173.51, so it missed me by right around 50 cents. So that hurts a little bit. But these Chinese stocks were down on delisting rumors. The U.S. is cracking down on some of these Chinese stocks, saying they're not being transparent and they're threatening to delist them. And Baidu took a huge hit. Now, Baidu's revenues are going to continue to grow, it looks like. So I personally think this is a great buying opportunity in some of these big Chinese names. There is that threat of being delisted, but I don't think that's going to happen, and that's just my opinion. So I am using this as a buying opportunity. I have been adding more of these stocks, and I personally just think it's a buying opportunity. I don't think these companies want to be delisted, so I think they're going to eventually comply with the U.S.'s demands, or they're going to come to some kind of agreement. But that remains to be seen. But I'm betting it's probably going to get resolved, so I'm buying some of these Chinese stocks. Another one of the Chinese stocks, this isn't one of my biggest losers, but it's also in my portfolio, is Baidu. And this one isn't Baidu. I'm sorry about that. This one is, Alibaba. Next one in my portfolio that I've been grabbing a lot of is Alibaba, and if this thing breaks 200, I'm probably going to grab some for my retirement. I just have it in my M1 Finance account, but I think Alibaba is a great value at these levels, and I do think that the problems that they're having with the U.S., I think they're going to be straightened out, and these companies are probably going to be okay, but that's just my guess. But my second biggest loser was Snapchat. Snapchat has been pulling back quite a bit. They did come out with really good earnings back in February, so I'm still pretty confident in this stock. I know there's just some sector rotation going on out of these tech stocks, so I am happy to be grabbing more Snapchat. Hopefully it pulls back a little farther. Now, the next one was the ARKK fund. The ARKK has been crashing. This one is getting pretty close to that 200 period simple moving average, so I think we'll probably get a bounce right there. This one was as high as $160 just a couple of months ago, so falling all the way down to 113 is a pretty good haircut for an ETF. But I think this portfolio in the ARKK fund should do well over the long run, so I am happy to be accumulating some more of that. Next biggest loser was CRISPR. CRISPR, this stock chart is pretty ugly. It is below the 200 period simple moving average, which is not a good thing. If it doesn't get back above it soon, that could be a very bad sign for CRISPR on a technical level, because usually when they crash below this moving average and don't get back above it soon, they could really roll over. So CRISPR, I am optimistic on their technology, but I am not optimistic on this chart unless it gets back over that 200 in the next day or two, because that is an ugly, ugly chart. The next one was Illumina. Now, Illumina is also having a pretty tough time trying to get above this 50 period simple moving average, just barely above that 200 simple moving average, but this is a pretty ugly looking chart. crashed through that 50 period and then tried to get back above it and had another reversal. So Illumina is a pretty ugly looking chart. If I had to guess, I would say that it's probably going to be touching the 200 period simple moving average before long. Because if it doesn't start getting some momentum and get back above that 50 period simple moving average, I do think that it's probably going to roll over. And the last one is Tesla. We can see that Tesla's chart looks pretty ugly. I would guess that Tesla looks a little bit of an inverted head and shoulders pattern. Actually, let's go to the hourly chart. Looks a little bit like an inverted head and shoulders pattern. It almost looks like it's going to roll over. If you're not familiar with what a head and shoulders pattern is, there's a shoulder, there's a shoulder, there is a head. This is the neckline. So normally if a stock can get above the neckline, that's a very bullish pattern, but Tesla is having a rough go of it. But anything can happen with Tesla. Tesla's coming out with their delivery numbers this week, and if they have fantastic delivery numbers, this thing could be off to the races again, back over 700 and through that neckline and into a new uptrend. But if that does not happen, this one could easily fall to this 200 period simple moving average. And if it does, I will gladly gobble up some more shares, because I definitely think Tesla is going to be a much higher stock in the next 5 years. So I will be very happy to accumulate some more Tesla on any weakness. Alright guys, well that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.